Good afternoon, everybody. It is Sunday, December 31st, the last day of 2023. It is 2:04 p.m. I'm Pierre Roberge, also known as the Daily Trader. I'm doing technical analysis on Tesla, many other stocks, EV stocks, Apple, Palantir, ARM, Nvidia. We are looking also at the stock indices, Dow Jones, S&P 500, Nasdaq, gold, silver, Bitcoin, Ripple, and maybe one or two pet stocks that I have personally. So I usually do a live on Sunday only for my members, but once a month I do it open to the public. So this is the one that we are on right now. So this one is for the public. The goal for me is to get myself known a little bit. So I don't know if we are going to get many people because this is December 31st. Anyway, this is going to be recorded, so you can watch it at a later point in time if you don't have the time to watch everything. But if you have some time, join me, ask questions, make comments, and I will be reacting to all of those. So this seems to be, we seem to have 9 viewers already. So let's go and let's start looking at our stocks, and this will be a little bit different than what I do every single day. Every single day I do a video for all of these stocks, well, many of these stocks that I have here on my watch list. But now, since this one is open to the public, I will be explaining a little bit more about technical analysis. So let's just start. This is Tesla stock. This is the chart of Tesla. And we are looking at charts because this is giving us context as to what is happening in a stock. And you need to know, we need to remember that what makes a stock go up is not a news. It's not a good news. It's not a bad news. It is the tug of war between the buyers and sellers. It is the strength. It's the strength of the buyers that is stronger than the sellers. This is what is making the stock go up, and the reverse is making a stock go down. So it's not the fundamentals of a company that is making the stock move. It's actual people that are buying the stocks. Disturbance in video. Okay, yeah, thank you for telling me. Let me see if I can fix this on my end. This looks, this looks pretty solid on my end. Yeah, I will be celebrating later tonight. But today, I'm working. So basically it's the tug of war between the buyers and sellers that is pushing the stock price. Once we have buyers coming in droves, and when they keep coming in, and when they overpower the sellers that are trying to sell. So sellers are trying to sell, the buyers are trying to buy. We need to say this. Because people don't understand this basic fact. I'm sorry about that. This is a basic fact. Tesla had great delivery numbers. This is fantastic. The stock will go up. Well, maybe yes, maybe no. Maybe yes, maybe no. This is it depends. And we have some examples that I like to look at. Let me find them. Okay, so here the Tesla stock started to go down since November 21. At the beginning of November 2021, the stock was at the time at $1,200, if you remember, but now the price has been adjusted because of a split that happened on August 25th. But basically, this top right here was at $1,200, and the stock has just cratered. I will say it. It has cratered, and a local bottom was on January of this year. So from $1,200 to $400 approximately. So the stock price divided by 4. While at the same time, if we look at the earnings call, look at the earnings. Wow, this is all green. Surprise earnings, surprise 7% in earnings, surprise 3% in revenues. Fantastic. Oh, surprise of 51% in earnings, surprise 5% in revenues. This is fantastic. Surprise 25% in earnings. So this is in July 20th. Surprise 2% in revenues. You want to see positive surprise like this, surprise, 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 surprise. These are pretty much all, except for this last one, just a 2% miss in revenues. So positive surprise, positive surprise, positive surprise, positive surprise, positive surprise. Okay. What did the stock do? Went from $1,200 to $400. That's the fact. This is fact. This is fact. This is fact. So you have two choices. If you believe in Tesla stock and you say, well, this is such a great company, the stock is going down, but it should not go down. It should not go down. Based on my Bible, it should not go down. So if you believe that, you won't sell because it's a great company. You will hold on to your stock and you will suffer emotionally from $1,200 to $400. And you will be looking for reassurances. Oh, it's going to go back up. It's going to go back up. It's going to go back up. So you will watch Solving the Money Problem. You will watch, and this is perfectly fine. You will watch people that will prop you up. Okay, well, yeah, no, it's going to go back up. It's just temporary, blah, blah, blah. So you can do that. You can do that. Or you can be realistic and look at the fact and look at the tug of war between the buyers and sellers and see that for whatever reason, the sellers are overpowering the buyers overall. And it has been like this for the past 2 years with Tesla. For the past 2 years, the sellers have been overpowering the buyers. And this is, the sellers are here. And they are overpowering. See the line that is coming down, $1,200 to right now. I should multiply it by 4, so that's maybe $1,000. So from $1,200 to $1,000, or post split $400 to $260. So the sellers have been overpowering the buyers for the past 2 years. So this is the difference between trading and investing. Investing, you are investing in a company and you don't really care about the stock price too much. So if you believe in Tesla and want to buy the stock and sell it maybe in 2030, and I agree with you, in 2030 it's going to be higher than what it is right now. So you should buy, and you should not even watch any news that is talking about the stock price at all. But it's hard to do that. So when people do that, then they need to, they suffer the emotional consequence of looking at their portfolio value come down from the top. If you bought early, you are still up, that's fine. But when we trade, we try to look at the trend, If a stock is going up, we stay in it. If it starts to come back down, we get our money out and we let it go down, and then we re-enter back in. So this is what we have done this year. We had different buy signals or buy impulses that I like to call them. So these are shown right here. Buy, 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 buy. Some are better than others. Some are not going that far, but they are all going higher at least. But this is what we are doing on this channel. So we are getting those swings instead of just holding and suffering, being happy when it goes up and suffering when it goes down. And maybe after a while, being even Steven, we find this disappointing, because if it has gone up, we at least had value on paper, but then why not sell that paper and keep the value and let it come down? So this is timing the market. This is looking at the patterns in the market. This is not predicting when these ups and downs are going to happen, because nobody can do that. But when they are happening in front of us in the present, we can see it and we can act on it. So this is what we're doing. So let me look at the comments a little bit. Yes, Tommy, I'm going to be celebrating soon. Momentum. We're all about momentum. Video and audio are fine. Hello, Tesla Terra. Nice to see you. Very interesting times for Tesla, and Happy New Year also 2024 from India. Dhanyawad. Okay, so let's look at what we are looking at. So Tesla is into a downtrend, as I said. And recently we tried to break above this downward resistance right here. This is the downward resistance. We tried to break it July 18th. We tried to break it, did not succeed. Boom. Came back down. And then we tried a little bit lower to break it. Not this one, but this one right here. And this has led us to see that the decrease in price, this is the decrease in price, decrease in the top price. This decrease in price was steeper. So we illustrated that with another bearish channel that was being tested. That was tested October 11th. That was tested right here November 29th. And it was successfully broken December 14th. So December 14th, this smaller, steeper downward channel was broken. So that's an event in itself. Now what is happening? Now we are back to our original less steep bearish channel, which is right here. This is the line right here. So this has been tested when? Very recently, December 27th and also December 28th. It has been tested and it failed. We failed. The buyers failed to push Tesla higher than this downward resistance right here. We failed for 2 days. The first day we didn't, the first day let me make it bigger. The first day right here, boom. The first day right here, we crossed it. This is the line right here. We crossed it during the day, and then we squished down a little bit. The sellers squished it down. The next day we started right here. This is what the candlestick is. When it's red, when it's a red candle, it means that the open is at the top and the close is at the bottom. And when it's green, it's the opposite. So we opened right here, went a little bit higher, 265.32, and then we're squished down lower than where we started yesterday. Well, yesterday, I mean the day before. So 2 consecutive days of rejection. So we are not going higher. So far, this is the only thing that we can say. So far, the sellers are stronger than the buyers. The buyers cannot push the stock higher. And if the stock does not go higher, then this is how we make money. We make money when we take a position in one direction and have the stock move in that direction. So it's not, if we are long, we want the stock to go higher, and it cannot go higher. So far, it cannot go higher. And now we are seeing a weakening also, because we are breaking lower than 250.69, which is, which was a resistance right here for maybe a week or two, since November 15th to, I would say, December 14th. So this was a resistance. The buyers did not want to go higher than this. Then on December 15th, then the buyers started to go higher and started to push back the sellers. But each time we have a resistance line right here, we have sellers that are hidden there. Well, they are not that much hidden because we know where they are, but we don't know how many of them are there. And yeah, we need to test with the buyers to see if they are going to overpower them. So right now, the resistance have been holding, and this support, the 250.69, has not been holding. So what I said, well, actually yesterday, I did the video yesterday because I was not really there on Friday. So what I said is that if we go on the 1 hour chart, if we are losing 247, then we should be going lower with Tesla. So check that number, 247. So I guess the stock market will be open, I guess, next Tuesday maybe. But when it opens, if you start to see Tesla price go lower than 247, then that might be a shorting opportunity. I will look at that shorting opportunity. Also, this goes along with the fact that we don't have stochastic over 60. So I am using this stochastic right here. You can pause this. So I am using this stochastic, a 21-day stochastic, and we see it time and time again. A stock does not go up without stochastic being over 60. So you look at it right here. When we received our buy impulse signal on January of this year, 23rd, then boom, stochastic was over 60. So look at this. Stochastic was over 60. We had this. Another buy signal right here, stochastic over 60. What did we have? We had this. Stochastic over 60. We had this. We are looking at other things also, but look at this. Yeah, this one is the least interesting one because the buys because the buy impulse was at 235, and then it stayed sideways for a long time before moving higher. So these are not, it's just like baseball, at least we have a good hit rate, but sometimes we are hitting a first base, what's it called in English? First base, second base, third base. It's not always a home run, but at least it's moving forward. So that's good enough. That's good enough. So basically this is what we are looking at. So right now on the 1 hour chart, the 247 support right here. The 247 support, if it is broken, we don't have stochastic over 60. So this is another way to tell us that there's no force in that stock, and if we break 247, it should be going down. Boom. Boom, 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 boom. So okay, so that's well, before I go back to the comments, let me go on the weekly chart of Tesla. So we have a broader view of what's happening, just to get a sense of if the stock patterns are different on the 1 hour on the weekly chart. So yeah, we have stochastic over 60 on the weekly. We have all of our indicators are bullish on the weekly chart. So this means that if we break the downward resistance I'm talking about on the daily, when we break it on the daily, if we break it soon, then this should be going higher. So the next step is $313, because we have all of our indicators on the weekly chart that are bullish. And once you see a bullish move on the daily, if you also have the corresponding bullish move on the weekly, then your daily move is going to last a lot longer. Happy New Year, a C Python. Is the triangle pattern can lead to a squeeze up or down? Which triangle pattern are you referring to? This one right here? This one right here? You can tell me. Okay, if it breaks above trend then goes back, does the old channel apply again? If it breaks above downtrend then goes back. Above a downtrend, it's really hard for me to understand this without looking at what you are looking at exactly. Does the old channel apply again? The old channels apply. Once you have a channel and the stock gets out of it and then gets back in, then yes, the channel and the lines are always applicable, I would say. Do you wait for candle close under 247 or any break? Okay, yeah, that's a good question. If you switch on the 1 hour chart to take a short right here, you should wait for the 1 hour candle to close. You should wait for it to close. You can chance it by not having to close, but the good thing to do is to wait for it to close. If it closes right here, then you can chance it and take a short. Okay. So that's pretty much it for Tesla. We are going to take a look at all of the other indices and indicators. So yeah, no, maybe a last word right here. We have lost stochastic over 60 on the daily chart. We have all of the other indicators. So this is telling me that even if we go a little bit lower on 247, it won't necessarily go super low, you know, because we still have some bullishness on the daily chart. So bullishness on the daily chart means that if we have a little bit of a short on the hourly chart, it won't be a long short because we don't have the 2 time frames aligned. We see weakness, a potential weakness on the 1 hour chart for a short, but the daily chart is pretty much bullish. Yes, stochastic is a little bit lower than 60, but all of the other indicators are still bullish. So this is just a sign of caution, so that if you decide to short on next week below 247, just keep in mind that if you see Tesla go a dip down to 230 something, you know, the first stop is going to be 242, then another stop is going to be 237. So if it goes lower like this, sell, because the daily chart is bullish. So this little short will come back to the daily chart, which is going to push it back up. If the daily chart had been bearish also, then you could have waited for a pullback on the 1 hour chart and let the 1 hour chart go even lower. But once you have a divergence between the bullishness on the daily and on the weekly, then you should just take your profit and run, which is great, which is fantastic. Taking profit and run. Sometimes it goes down too fast. Yes, sometimes it goes down too fast. And sometimes waiting for an hour. So Tesla Terra is talking about waiting for the first hour right here before considering it a sell signal, a sell impulse. So you are right, nothing is for sure. The theory is that we should wait for a close of a candle in order to signify a break of a support or resistance. But sometimes the close of the candle is right here this low, so then that's it. It's a little bit too late to catch the swing because the swing has been too fast. So this can always happen. What would be a good level of stochastic to keep an eventual short on Tesla? So anything below 60. So if you short at 247, let's say we have a candle right here, another one right here, and let's say it goes down to 237, and then it starts to go up. It starts to go up. So my advice is for you to sell right here, but just to be safe. But you can also let it go back up until it breaks over 60. So what oftentimes happen is that we have a bounce at some point, and then if we don't cross 60 here, it should be coming back down. But the chances of that happening are just a little bit lower because, as I said on the daily chart, it's still bullish. But this is how you can say, this is how stochastic is helping you decide if you want to stay in the game. So let's say that you short right here and you buy a couple of options. Then one way of doing it is that you have the two options and you write them down. And when you come here, you can decide to sell one and keep the other one until stochastic goes back over 60. So maybe this is going to do something like this. It does not go over 60 and then it continues down, and then you have your other option to provide you even more profit. So there's always multiple ways of doing it, and the selling part is the most complex in terms of we all have our different financial situations. A buy is a buy. Getting into position is kind of clear. It's kind of clear. A buy impulse, as I call them, a buy impulse, a sell impulse, this is clear. But when you want to sell, it's very personal. If you see money on paper and you just want to keep it, you can keep it. So this is why I'm saying, you can keep it here, or you can chance it that it will pull back and do this instead of continue. Because if it continues, then it goes higher here, you shorted here and you will exit here, so you made no money. While this was the potential. This was the potential, and that potential got real. It got real and it came back up, and you finish even Steven or even a little bit with a loss, and you wasted this move, a $10 move, a $10 per stock move. So it all depends on, do you want to swing for the bleachers or do you want to just stop at first base? And if you buy more than one option, then you can play both. You can stop. You can get your profit. You can get some of the profit by selling some of your positions at the first stop and then first base. And then you keep some of the rest. It does not need to be 50-50. It could be you set 3/4 as soon as you got some profit, and you just let a runner, and even if you lose that runner, then you still made a profit overall. So this is the safest way of doing it. But this is very, very personal. Doesn't the daily take time to catch up, so hourly more accurate? Yes, the daily takes more time to catch up. But in terms of trend, more accurate, I'm not sure more accurate. I think that trend-wise, there's more noise the more detailed you go in the time frame. So, you know, if you go on the 5-minute time chart, in the 5-minute chart, you have a lot more noise. Goes up, goes down, goes up, goes down. It's a little bit more jerky. So from that point of view, trends are easier to see when you zoom out, actually. You know, this is the Tesla trend. You know, this is when each candle equals 1 year. So this is Tesla's trend. Up for a couple of years, down for a couple of years, and now it's back up. So I prefer to say that trends, yeah, it's easier to see the trends as you zoom out. But if you want the quicker entry, assuming that you are along the trend on the higher time frame, then it's the smaller time frame that can help you, because it has more resolution. You know, you have 7 candles per 1 daily candle. So yeah, so far Tesla need a massive upturn. Yes, yeah. Where is the upturn right now? There's no upturn. Yes, the fact that they came out with the Cybertruck helped raise the mood, but this has not prevented this. You know, if you think about it, if you think about it, this downward resistance line has been in effect for 2 years. 2 years. So this is pretty. I'm going to make it even thicker. This is pretty strong. This is a pretty strong pattern. So stocks move in pattern. They go up and down in pattern. There's some noise between the pattern. You know, the pattern is this line and this line. This is one pattern. And the stock goes crazy in between. But overall, the pattern is very crystal clear. Crystal clear, touch here, touch here, touch here, right on the same line. Touch here. Here, this was close, and touch here. So this is pretty clear. Okay. Welcome. Some support lines needs to be green. Yeah, you're right. I wish TradingView would change the colors automatically based on the close. You know, if the close is higher, you change the color. Okay, let me look at the other things. Okay, so the VIX is the fear factor of the stock market. So when the VIX is down, the stock market tends to go up. So stock market was up. Well, has been up since 2023. You know, the beginning of the year is right here. This is the trend, the overall trend. Yes, we had some move ups here, but the overall trend is that stock market, the VIX is going down, stock market is going up, and also the same. Well, not exactly the same thing, but we are also looking at the government bonds. So the bonds, when they are going down, stock market tends to go up also. And if we go on the weekly chart, so 2023, we saw a rise. We saw a rise in the bonds, and now we are seeing the bonds come down. No stochastic right here, so the bonds should be continuing down. Because you can see the stochastic as the force in the market. You know, if you are over 60, it means that you have enough force to go up. If you are below 60, it should not go up. It should not go up significantly. It could do a blimp up, but it should continue down if you don't have stochastic over 60. So yeah, so I will be looking at the rest from the weekly chart. So this is giving us a longer outlook. So this is talking about the weekly pattern instead of the daily pattern or the 1 hour pattern that we looked at. So this is the weekly pattern. So bond should be going down. US dollar also. US dollar is temporarily stopped, you know, right here on this support. Same place where it was in January of this year, April, you know, see the same lines, the same line, the same spot. So right now, if we lose 143 for the US dollar, this is a milestone. If we lose this, then we should go lower, which would also help the stock market. Let's look at Rivian. Rivian on the weekly chart, you know, look at this. We have stochastic over 60. We have RSI when it's above 50 is bullish, below 50 it's bearish, and DMI when the green line is above the red line it's bullish, obviously. So we have bullishness right here on the weekly chart. So short term on the daily, Rivian is having a hard time breaking 24.62, but the move that we had, you know, since November of this year is strong enough that we can qualify Rivian as being bullish on the weekly chart. So it's a weekly bullish pattern, just like a tide, you know, waves and tides. So the waves are the daily chart and the tide is the weekly chart. So now we have the tide in our direction right here. So, you know, if we just need to break 24.62 and Rivian should be going further higher. So next stop is going to be 40 bucks, you know, because we have some sellers at 40 bucks right here, or the buyers are not willing to go over 40 bucks. 40 bucks right here. And no, sorry, if we break 24.62, we have other sellers that we need to overcome at 26.91 before looking at 40 bucks. Xpeng, well, okay, no weekly bullish trend on this one. It's just going sideways. It's not as low as where it was at the beginning of the year. It's one step higher, but this is not strong enough to qualify this as a bullish move. NIO, not yet on the weekly. Well, oh no, sorry. Just we have RSI that's bullish, we have DMI that's bullish, we don't have stochastic, which we like to have a lot. MACD is crossing over, so maybe we are going to get that eventually, but so far we can only qualify the move we have on the daily as a temporary move. So this means that we need to cash in when we are going to encounter some resistance. So we can decide to cash in. I'm into NIO, so I can legitimately decide to cash in at 10.21, or if I feel lucky, 11.31, because there's some chance that we are going to come back down because we don't have the weekly chart behind us. VinFast, let me go on the weekly chart. VinFast, you know, no push, no bullishness really on the weekly chart. So this one either. This one the same. If we catch a move on the daily, which we had the buy signal, a buy impulse. We had the buy impulse on December 15th. So anything we make here, we should consider that we need to cash it in if we start, you know, when we want. If we feel we had made enough money, we can sell. And if we are reaching the resistance right here, we should cash in also. So, but when we have the weekly chart behind us, then we can decide not to cash in as soon as we hit the resistance, because most likely it should just pull back a bit and continue. The chances that it continues are higher when we have the higher time frame behind us. Apple weekly chart. Yeah, well, okay. This is bullish right here. But right now we have some resistance, you know, we see it right here. We have some resistance on the weekly chart also. So once we break 198.35, boom, we should go higher, but everything's bullish right now. So Apple is looking good. ARM, this is a new stock, so we don't have much indicators yet on the weekly chart, but you know, this is just going like crazy. This is going like super craziness. Palantir, we came close to break 2045. We need to break it again to have a move up. So don't even bother getting into it before 2045 for any long-term move, I mean, because you know, it's so far away, and you know, there's no stochastic over 60 on the daily either, on the 1 hour chart either, so you know, this one is not ready to move up yet. It's too bad because it's a great company, but we don't care if it's a great company or not. It's, are the buyers showing up versus the sellers? That's the only thing that matters. And even if we have, you know, even if a company is great, if you have some big deep pocket institutions that decide to sell a stock that they own, then what are you going to do? You know, if a BlackRock or Vanguard or what's her face, ARK Invest decides to dump, they decide to dump, and this is going to have an effect on the market right here, even though the fundamentals of a company are great. So it's not the fundamentals that make a stock move up, it's the mass of buyers and sellers. That's it. And this is what we're looking for. You know, I think the term technical analysis is a misnomer. Technical analysis, what's technical about it? I don't know. It's not technical. It's a buyer seller analysis. It's offer and demand analysis. This is what it is. It's just the basic principle. So okay, Nvidia going sideways. Yeah, it had a nice run. It had a super nice run. Now it's consolidating. Stocks do that. They go down, they go sideways, and they go up in any order. In no particular order. And right now this one is going sideways. So when it's going sideways, this is pretty boring, but we still need to check it, because one day it will stop going sideways. How will we know when it stops going sideways? When it starts to go higher than sideways. And what is higher than sideways? Well, if sideways was between 397.59 and 503, then higher than sideways is higher than 503. Boom. If it's higher than 503, then it's no longer sideways. So boom, this is a buy impulse. You can decide to get in. That's it. Let's look at our indices. So stock indices, Dow Jones is surely going higher than sideways. Sideways being 36,641. Boom. Broke it. S&P broke it too. You know, sideways was right here. Sideways was right here at 47.42. This is SPX. Boom. Broke it. This is no longer sideways. Should continue. It does not always work, but it should work. Nasdaq. Boom. Broke it too. So, you know, we have our three stock indices that are making higher highs since the past 2 years. Yes, it's possible that they just trick us and do something like this. It's possible. But at least they are breaking something. So there's some chance that it continues. Let's look at physical gold. So physical gold, 1611 and 1654 are very important. Right now it's sideways. You see it? So gold has been sideways since July of 2020. Going sideways. Boom. Cannot make this up. This is, well, I mean, this is pretty clear. It's going sideways. So this is why we need to look at a lot of stocks, because some stock can go sideways for years. So this is why I'm not an investor, because I don't want to wait for a couple of years while my money is doing nothing, while I should be trading instead to catch a new swing in a new stock. Silver, you see, it's same thing, sideways since COVID, and even lower. It's not even as good as gold. Gold at least is close to where it was. Bitcoin. Okay, I think I need to clean this up a little bit. I won't do this right now, but it was going down. Started to go sideways, and now it's going up. So this is bullish on the weekly chart. Ripple, close to being bullish on the weekly chart, 59.78 right here, stochastic. Happy to see this. On the daily, not yet, but once it goes, it should go. And let's look before I look at the comments. Yeah, Nouveau Monde graphite. Nouveau Monde graphite. Yeah, look at this chart here. This was a great candle. This was a great candle last Friday. If it breaks 261, you should have another swing right here. You should have another swing. If we go on the weekly, not really that much bullish. So again, just get your profit on. If it breaks 261, you can buy and then start thinking about selling at 290. You can let a few runners up to 310. But beyond that, if it goes beyond that and you have sold, you get back in and you catch another swing. So this is fine. You can buy here, sell some here, keep some runners, sell the rest here, and if it comes back down like this, you made money and you're happy instead of being sideways, even Steven. And if it continues, you get back in here and you catch another swing. So you got one swing, two swing, three swings. And if it reverts here, you still have some profit. That's it. So we don't need to be perfectionists, because perfectionists sometimes make great money, but most of the time they don't. Bonne année, Ellie Duff. Thank you, USC Python. And let me look at this last comment, and then I'm gonna close off this live and go. I'm going to go have dinner very soon. Okay, Neo to sell at resistance point. We do not know. Why not wait to see it goes past the resistance point or starts going? Okay, yeah, okay. To each his own. So yes, if it goes up to 1131, the safest thing to do if you want to protect money is to sell as soon as it reaches it. Boom, you sell. That's the easiest, well, that's the safest way not to leave money on the table. If you don't want to do that, then you can look at it start to come down a little bit. So I advise people, when you are close to thinking about selling or close to thinking about buying, you switch on the 1 hour chart and then you start looking for a pattern. So if it starts to reach, if it starts to reach this here, if it starts to reach this, this is the 1 hour chart, if it starts to reach this, as I said, you can sell as soon as it reaches it. If you want to stay in it, then you can let it maybe bounce on it and start seeing a pattern. If you start seeing a pattern, then you can set yourself a limit. Let's say, okay, this is like a congestion zone right here. I'm gonna sell if it goes lower than 987. So if it goes lower, boom, you sell. So you did not sell here, you sold here, so you have a little bit less profit, this instead of this, but you swung for the bleachers. So doing this is fine, but you swung for the bleachers, hoping that, yes, it comes down, it comes down, it comes down, and then it continues, and then you reach the bleachers and you have a home run. So both of these strategies are perfectly good. Perfectly good. These are very personal strategies. If you had maybe 5 or 6 bad trades in the past, maybe you want to keep some money or keep part of the profit and letting a few runners run. These are perfectly legitimate ways of investing, of trading. Thank you, Lush. Yeah, thank you very much. Yeah, your French is pretty good. Je te souhaite une belle année aussi, remplie d'abondance et de souvenirs incroyables. So, thank you very much, everybody, for attending this live with me. It's always fun to have some comments while I'm speaking by myself, so I appreciate it. So, I'm going to wish you a great 2024. Happy New Year. Happy New Year. I wish you health, freedom, financial stability, financial freedom. This is, I think, and love, and in no particular order. Health and love maybe would be the best order. Health and love, love and health. Love maybe first and health second. I'm not sure. So you can pick and choose the order of these. So I'm going to wish you a happy 2024. And I'm going to be back as soon as the stock market opens, maybe January 2nd, I'm not sure. But I will be back there, so I hope to see you. You can subscribe. I do a video that lasts pretty much between 5 and 10 minutes every single day, where we are looking at all of the stocks that we looked at today. Looking at all of these stocks right here, boom, 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 boom. Because we never know when they are going to cross something. Google right here, crossed. It stopped going sideways. Let me just adjust this. Google stopped going sideways right here, December 22nd. And we were there and we saw it because we look at it every day. Every single candle we are looking at every single day. So we cannot miss when something goes because we see it. Of course, we don't look at every stock in the world because we don't have time, but we look at some of the most interesting stocks that have the most potential of giving us a nice up run. So you can subscribe. You can subscribe to this channel. You can become a member if you want. I have a tier, and I should talk about this a little bit more. I have a tier where you can get a copy of those lines. Those very important lines that last for 2 years, you get a copy of those. So I have a tier where you can get my lines on any stock, and you can copy them into your TradingView account. So this is something that you can do. So I'm gonna shut up. So again, happy new year, and we are going to see each other in 2024. And I'm gonna tell you, à la prochaine.